Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market continued to balance within a fairly narrow range. And at this point, heading into the open, we're going to be determining the day's bias based on how the market responds to the 58 quarter to 60 quarter initial support. If the market can hold that zone, then we know that buyers can technically maintain control even on the smaller time frames, and we could see a move back up into the 67 to 68 area and potentially 70 to 72 half. On the downside, in the event of a break below 58 quarter, as long as we are breaking down on strong downside momentum, we could test yesterday's low quite easily, and then from there, even 51 to 53 and potentially the 49 swing low. Those areas could be tested, and then responsive buyers could still technically defend that 51 to 53 zone and the 49 support level. So if you're trading the 51-53 area, just keep in mind that if the market's going down on heavy volume and momentum, then we could actually take that zone out by a little bit before we get another buy response. So short term, the market would be exhausted into 51-53, but you just want to make sure that you are positioning yourself at the right price within the zone if you're going to fade a downside move. Now, overall, given that we have Apple reporting earnings after the close and we have the FOMC announcement tomorrow, it doesn't seem like we're going to get a big break one way or the other. So even if we go to the upside, most likely 70 to 72 half will contain it, or we might make a marginal high the way that we've been doing over the last several days. And the same idea goes on the downside, that even if we break lower, we're probably not going to completely liquidate. So by the time we reach the 51, the 49, the market would be exhausted. And if we're still running on fairly light volume, then there may not be much more left in the range for the day. And in the event that we do continue down into the 21.46 or the lower support areas at 41 quarter to 43 quarter, 38 quarter, 39 half, at that point the range would definitely be exhausted, would be hitting a range extreme. So that area can certainly cap the downside. But recently we've seen in the market the RTH range is typically around 11 to 13 points. So just keep that idea in mind, that unless we're seeing a spike in volume, which is very unlikely given the Apple earnings after the close and the FOMC announcement tomorrow. So unless we see a volume that's really rising, it's unlikely that we're going to print a very wide range. And if we're going to print another 10 to 12 point range, then we may not really go anywhere today. We may just either test the 70-72 half on the upside, or possibly test the 51 area on the downside, and then just continue to balance. And then tomorrow perhaps we can get a directional break from this range off the FOMC announcement. So that's really how the day is setting up right now. Our bias heading into the day is very neutral. We're really open to a move in either direction. You can use 58 quarter, 60 quarter as a very short-term micro bull bear zone off the open to determine short-term directional bias. But overall, since the market is extremely balanced and just stuck in a range, our short-term bias is neutral, and we're really going to have to gauge the underlying momentum situation, and we're going to have to gauge the strength or weakness in real time on the market internals and the other markets to determine which side is really still in control and whether it still makes sense to initiate a long, even at initial support, looking for a move higher. Because even for the market to push off of initial support, we are still going to have to see some broad market strength and some decent momentum, even to take it up to 67, 68 and 70 to 72 half. So those are the main ideas heading into the open. Let's see how the market responds to initial support. Let's see what type of momentum and overall market strength or weakness we're seeing off the open, and we'll take it from there.